Welcome everyone to this week's Mutant Meetup call. We've been holding these calls for the last several weeks on Tuesdays at 9 a.m. Eastern, 1 p.m. UTC. Today we have several things to go over. So I wanted to talk a bit about the proposal to allocate capital to Maple Finance in the Maven 11 WETH pool. Now that that has been approved, I thought I'd just give an overview of that specific Maven 11 pool since I did have some questions here in the last week on Twitter and in Discord about this. So I thought I'd just go and give an overview of that pool itself. I know these are things that we covered in the proposal, but I wanted to specifically talk a little bit about that pool's history when it launched and just kind of give an overview of that. Then we'll go through the updates for the week. We'll hear Hugh's weekly core team updates. I will do a week in review of cover sales and talk about the active coverage by cover type, and then provide some community updates. So I'll talk about the Bancor V3 payouts, and I'll talk about the ETH proof of work snapshot vote and the next steps. I'm sure that Gautier can jump in there and talk a little bit about that as well. So let's jump into things. First thing is doing a review of proposal 172. This did pass. This passed on Thursday, and this proposal is currently being voted on by the advisory board just for some specific parameters. So this will be executed this week. But specifically, this proposal was to grant the advisory board the power to implement some of these smart contract upgrades so that we could allocate 10% of the capital pool, which is roughly 15,348 ETH, into our enzyme integrations that can then be deposited into the Maple Finance Maven 11 WETH lending pool. And this was up for a period of 3 days. The actual form proposal for this vote has been live since the 4th of May. This has been discussed back and forth. One of the things that was holding us up was the technical constraints of getting that enzyme integration set up so that we could manage the capital through there. But now that all of that is done, this was put up for votes. Members did approve this, and the advisory board did vote to put this through since we didn't meet 100% of quorum. And now that this is done, I'll go through and talk a little bit about Nexus Investments review, but they had presented the risks and the opportunity, and they broke down where the APY came from, which is a combination of interest paid by lenders and then Maple rewards over time. The pool that we will be depositing in is the Maven 11 WETH lending pool on Maple Finance. For those of you who aren't familiar with Maven 11, they're very active within DeFi. They are a blockchain and digital asset investment firm. They have a pretty broad team. The pool delegate for Maple is Baller Bowmans, and they've outlined information about the pool. One of the things that they're very transparent about and that they're very rigorous about is the due diligence that they perform on anybody that's going to they're going to lend to from this pool. So the assets that are in the pool are lent out to typically larger institutions that are conducting delta neutral strategies. They have a little bit of the info about the strategy for the pool. So they're looking to lend to borrowers that have capital-intensive businesses and strong balance sheets. This pool itself, like I'll talk about here, the next slide or the slide after, was launched in March. But since then, they've issued quite a few loans. They have their loans in USD terms, but all the capital in this pool, of course, is WETH. So if we look at some of the pool stats here, their total capacity that is remaining is 18,225 WETH. So when we deposit in here, we're going to close up 84.21% of that capacity. The active loans that they have outs are for 16,775 WETH. They have Maple stakers who are staking to provide some protection for the pool. They have that outlined on the left-hand side. And then they talk about the earnings over here. So the current APY when I took this was 6.75%. And they have a reflection of the interest earned to date. Again, that APY is a combination of Maple rewards and interest paid for the pool. The interest for the pool, I think, is around 3.8% APY. And the Maple rewards will fluctuate as the value of Maple goes up and down as well. And just as a framework of the loan history, so you can look at this on their website as well, but I have the term end date included in here, as well as roughly what the interest owed at the end of the term date based on the interest rate is. 2 of these loans have matured to date since they were first issued. The other 8 are active, and you can see that they either have quarterly terms or 180-day terms. So all of this stuff can be looked at directly on the Maven 11 WETH lending pool site. And you can look through, the history, who they're currently lending to, who have paid back loans, all of this information. And as far as next steps for this, so this has been something that's been talked about. I know the Maple team had shared this last week when the vote went through. We saw some coverage in the block, but we still need to make that initial deposit into Enzyme, which there are some technical adjustments that need to be made on the smart contract level. That is what the advisory board is currently working to set up and vote on. And then once those votes go through, then we can put this capital into Enzyme, and from there it's going to be deposited in that WETH pool, where it can start generating investment earnings when it's being lent out to lenders that go through a due diligence process in that pool. As far as what we do with the Maple rewards, those will accrue over time. Nexus Investment did lay out on the forum the various options, so I'm sure as time goes on, they'll review those options. For the Maple rewards, they can be staked for X Maple. They can be used to stake against the pool to provide coverage and earn additional Maple rewards. And, we could always harvest some of those and then sell those as time goes on to capture that APY and then bring that back to the capital pool as well. So, but those options are also outlined on that original forum proposal that you can find in the announcements or in the community call channel as well on that thread. So just wanted to walk through that because I'd seen some people asking questions and different things about how that pool works, some of the details there. So all of that is very transparent. I can see that the Maven 11 team is also very transparent. They have reports they put out often. They have a monthly newsletter where they talk about some of their investments, but they also talk about their WETH lending pool as well. So highly recommend checking that out. I'll turn things over to Hugh so he can give his weekly core team update. Hugh?
Cool. Thanks. Thanks, Lee. So yeah, just to add on the Maple investment, we're actually just going through the execution at the moment. There's quite a few proposals to go through and technical checks to make. So with any luck, it'll be done at some point by tomorrow or sometime. It depends, but we're partway through that process at the moment. So you can follow that on chain if you wish. So yeah, so that's one of the points that we're working through with the core team. So just to give you an idea, we had to work out the integration with Maple with Enzyme to make sure that the capital pool can interact with the Enzyme system, and then and that passes over to the Enzyme Vault, which will be managed by the Avantgarde team. And we also had to get Chainlink to build an oracle specifically for the Vault so that our capital pool knows what the asset value is at all times, so that it can work out how much assets are in the mutual. And so those are kind of the two main reasons. It's taken us a little bit to get from the initial proposal stage to actually getting it executed, because we just needed to do that development work. And cross-team development work and stuff. And so all of that's going quite well now. So hopefully in the next day, we'll get that executed and start earning some yield on that. So that's one part. I guess V2 is the next part. Just continuing to work through the UI and the funnel. Basically just continuing to ramp up the testing after we've got the audits back, and work through some minor details on terms of the audit findings. As I've said before, nothing major there. So that's all good. As soon as we know time frame again, we'll let you know. But we're just kind of working through those things at the moment. No major issues there. I guess on the other side of things, we have been the tokenomics working group. I can give you a little bit of an update there. We've been discussing. We've progressed from just looking at this from a kind of economics point of view to actually getting the technical team involved just to make sure that the kind of broad strawman proposals that we've got are technically able to be implemented. And I expect we have to make some changes as a result of that. But once we kind of pull that together and I get something that looks reasonable, I think the next step is to share it more broadly with the community and for wider feedback. You can, of course, get involved with the tokenomics working group if you wish. Contact Dopey or Ray on the forum or in Discord, and you can work through that as well. So yeah, so there's some interesting aspects coming out of that. Again, that's not imminent, but there's a decent amount of work going into it because it's a key part to the mutual, and I think it's time to relook at some of the mechanisms there. So that's been going quite well as well. We're also hiring some devs. So we've had one new dev join us about a week ago, 2 weeks ago, and some more, another dev joining in the next couple of weeks. So that's really exciting that we're growing the team a bit, because I think one of our biggest constraint as a protocol has probably been a developer resource. So we're kind of making some good progress on that side as well. Trying to think if there's anything there I've missed. I've definitely got some comments on the ETH proof of work stuff. So, and I can talk through some technical detail on that when we get to it as well. So, but I can answer kind of your questions on that side as well. I'll happy to take other questions and pick those up when we get to them later in the agenda.
If there's no additional questions for Hugh right now, I will move on to the cover by section. If somebody does have a question, just feel free to drop it in the community calls text channel, or feel free to turn on voice and ask questions. I'm happy to stop and get you an answer for that as well. I'll do a review of the cover sales for the last week. You can find the Nexus tracker in the thread for today's call as well. That's where I get all of the data from. So in the last week, we sold a little bit more than 6.5 million in cover and brought in $41,818 in premiums. The largest cover buys that we saw come through were for Aave V2, Uniswap V3, and Alchemix V2. But interestingly enough, this week, we had a big shift back to ETH-denominated cover buys. So ETH denomination, I'd say roughly 84% for cover sold. DAI denomination is roughly 16%, and roughly 17% for DAI denomination premiums earned, and 83% for ETH denomination for premiums earned. Looking at the active coverage by cover type, for active protocol cover policies, we have a little bit more than 105,000 ETH, almost 200 million in active coverage across the different protocol cover products. Ensign V3, Convex Finance, Anchor, Curve, Aave V2, Liquidity, Gnosis Safe, Yeti Finance, Angle, and DYDX Perpetual. And then from there, things start sloping off a bit. For custody cover, it is 20,371 ETH and about 38.6 million. FTX, Heal Lab, and Nexo are still the largest active coverage amounts, with Crypto.com, Holdonut, and BlockFi following after, and then things again slope off from there. For yield token cover, we saw a shift to Yearn Y Curve ST ETH. So last week, previously, it was the Convex 3 Curve pool, but I believe that active cover expired, and so now it's the Yearn YV Curve ST ETH pool. And so here we have a little bit more than 1,900 ETH, 3.6 million in active coverage. And then the active ETH2 stake and cover policies remain the same from the previous week. So these are the two stake-wise policies. And this is 5,438 ETH, or 10.3 million in active coverage. I'll go through some of these community updates. So I wanted to start first with the Bancor V3 claim. So this was claim 120. This was approved and paid here in the last week. We put an announcement up with the totals to date. On this one specifically, there was a 20 ETH claim, and it did require 3066.24 NXM, and it was approved with the quorum amounts. I know I had a discussion with somebody in the claims discussions channel about this vote, and they had disagreed with the outcome, which is why it's really important to review and discuss and participate when claims are filed. Even if you don't vote, if you feel very strongly a certain way, it's good to discuss that in that claims channel. To go over this too, the voting consensus has to be at least 70% or greater, and the voting weight has to be at least 5 times the cover amount for something to pass through the traditional claims assessment process. But specifically here, I know that this was a bit of a contentious vote among certain folks. I know that we had discussed this previously, and the view was that this would not be covered. But then going through, when the member who filed the claim provided proof of loss, they had laid things out, presented economic design failure, and there wasn't really any discussion around this, but it did pass. I would say on this one, we went through the process, we made the announcement. Again, it's really important to be active and participate there and share your view of things, even if you're not voting, to have that discussion in the channel. Coverage is discretionary cover, so ultimately members are the ones that decide on claim outcomes. And again, this is why it's really important to talk about these claims when they come through, especially when they're not so clear-cut. Like past examples with reentrancy attacks or oracle manipulation. So when things are kind of in that economic design failure area, or at least that's what is provided in proof of loss, then that's something that we should probably have more robust discussion about, especially when people have strong feelings one way or the other. I would say in general, in DeFi governance or in any kind of mechanism, especially with claims, if you feel strongly, definitely share your thoughts and vote that way. But in this case, I think the other member who I talked with assumed that it would go a certain way, and then it didn't. So I definitely want everyone to participate and have their voice heard here. Fortunately, this person, had a loss and they had a claim paid, but it's important to kind of share your views there. So I just wanted to go over this, especially, like I said, there had been some discussion about this, and then I had that discussion yesterday. But it's good that we're paying claims. It's good that we went through this process, and it's just a reminder that it's important to be involved, and when those announcements come out, get involved in the discussion and participate. I think claims assessment, risk assessment, all of these roles are really important roles within the mutual, and it's something that anybody who's a member can participate in. The temperature check did pass on Snapshot, so 6.7K worth of NXM voted to approve, to grant someone the ability to capture this value and execute this. So there is support for this. Again, this was a temperature check. It's not binding, just looking at sentiment. So the next steps here are that we need to talk about how exactly this would be executed, right? So who would be the third party that could potentially custody the ETH on the proof of work chain and then execute a trade on a centralized exchange? How would this be moved and withdrawn to avoid replay attacks if the chain ID remains the same between the ETH proof of stake network and the ETH proof of work network? Should a hard fork happen? And then what should members do with the proceeds? So I know that Gautier is on the call. Gautier, did you want to talk about this briefly? I know that you have been the one that put this on the forum and have kind of been driving this discussion.
Hey Lee, can you hear me?
Yes, I can.
Cool. So very happy to see this vote approved by the community. It was important to make sure that the community supports the POS chain going forward, and that the community thinks it's worth the hustle to try to capture some value from the forks. I think it will be the next vote will be about how we use the proceeds from that fork tokens. So under which form we want to hold them. Is it as WNXM, as DAI, as ETH, even USDC maybe? And where should these token go? Is it in the capital pool or in the community fund? And then once the community approved on this, I guess the next step will be a formal on-chain vote, formal governance vote with a complete solution.
Cool, thanks, Cody. I'll jump in here as well. Just a couple of points from a technical kind of point of view to give everyone an idea of what can be done. So I guess what's going to happen, assuming the proof of work fork gets some traction, is that all of the assets in the capital pool will essentially be duplicated on that on the proof of work chain. And so there's some DAI, there's a decent amount of ETH, there's some staked ETH, and there will be some Maple like the enzyme vault with the Maple investment that will be executed before then. So I guess what we should expect is that all non-ETH assets are likely worth nothing. I guess the one more unknown is really the staked ETH part of that. I'm really not sure what Lido DAO would do there and etc. But I think what we're mainly talking about here is the ETH on the basically the ETH. And so I think what we need to do is we can only execute these trades on a centralized exchange. And we don't know exactly which centralized exchanges are going to list it. So we kind of need to be a bit responsive and have some flexibility. So I think any governance vote here has to kind of hand over a decent amount of autonomy to an individual or a group of individuals to actually execute this. But you are going to require someone who can perform the KYC on a centralized exchange and go through that process. So that's kind of one thing, and I think we should kind of expect that ideally they're just getting the proof of work ETH and then selling that for another asset. And so on the kind of the replay attack stuff, if there's the same chain ID, there is a way of making sure that the proposal can't be replayed attack on the main chain. I'm not. It's to do with the nonce, making sure that the nonce is not the same, and so we can effectively do that and make sure that it can't be replayed attacked. So there is a solution here there, so I wouldn't worry too much about that. I guess my main questions, I guess the next steps that I think we should look at are what we should do with the proceeds, and I think there's a few options there. I think I've seen quite a few comments, and maybe the easiest is to kind of the highest ROI would be to buy back Wrap.xm and probably just hold it in the community fund. That's probably the best option from an ROI point of view. I guess there's we're kind of in a bear market, I guess, if you believe that. Then there's some arguments to be said for holding some more stables either in the community fund or the capital pool. But I think the highest ROI is probably going to be buying back Wrap.xm. So I think that's a specific thing that we need to include in the next signaling vote. Perhaps I'm not quite sure exactly what we think is the best process here, but I think the next vote it would help to clarify what we don't want to do with the proceeds, and then who we can potentially trust or who we're happy to give the power to execute this. So yeah, I think those are the main points from my point of view.
Do you have any recommendations for the individual?
I think probably either like someone like Richard Chen. I mean, I could probably do some of it myself as well. I'm not quite sure what the the tax implications are, but I'm sure we can work through that stuff. So yeah, I think you either trust one of the community fund multi-sig members or one of the advisory board members. They seem like the most obvious choice. I think it probably would be helpful to get this sorted reasonably early. Like obviously someone has to be willing to do it, and they probably want to get some accounts on a few centralized exchanges. It's going to be hard to know which ones are going to list. So yeah, but a bit of research on that side would help in advance. So I think I think doing some reaching out to a few people, which I can help with, about who the good options might be. Is we can do that beforehand. But yeah, a community fund multi-sig member or probably one of the advisory boards are kind of the most obvious choices to me, unless someone else wants to stick their hand up.
And I think from my point of view, probably the next logical step would be to outline some of these things on the forum, and then proceed to have a discussion about what we're going to do with the proceeds. And then, if there are multiple people that would like to do this, then I guess have something outlined on the forum. But I think likely, if there's one person that would be willing to do it, we can just include that information. But having a vote via snapshot just to narrow down the choices to get clear consensus on what the community would like to do with the funds, since when we put it to a vote on chain, it's basically a approve or don't approve decision. We can't have more dynamic decisions with the on-chain vote. So if we want to hold it in DAI, or if we want to hold ETH in the capital pool, or if we want to buy back WNXM, that should be the broader discussion I think that we have, and probably one of the more important next steps, along with who's actually going to be executing this trade. Yeah, and I think it's important to note too that this would just be the ETH on the proof of work chain and not any assets on the actual proof of stake chain from the capital pool. So this is just talking about the ETH on the proof of work hard fork that may or may not occur after the merge. I think most of this is just speculation, but having a plan in place in case we can capture value is something that's going to be important. So I'm happy, Gautier, to kind of refine the text and then help with that update on the forum, and then move things along from there. But does anybody have any questions here, or is there anything that we can clarify? I do see there's something. I see Butter's comment just now, but Butter, did we answer your question previously that you had at the beginning of the call as well? Okay. Sounds good, Butter.
Do you think, like, for the next steps, should we do an entire new post on the forum, or is the existing one good enough? Maybe we can do a new one where advisory board members or community fund signers can notify that they are willing to, execute the trade on the exchange.
Yeah, I mean, we can do a new post. I think that's something that we can talk about. We can always link to the old post. As far as time frame on this, I would say since the merge is scheduled for the 15th, whether or not it happens exactly on that day, we'll have to see. But I think we should probably try and have something on the forum and shoot for an on-chain vote here probably in the next couple of weeks. But yeah, happy to help with that process, Gautier. PoW, if you have any immediate opinions on that. But yeah, I think next steps would be getting something on the forum here sometime this week, and then I can post an announcement about that as well.
Cool. I'll DM you.
Sounds good. Okay, and then Butter is asking, is it not better to short ETH proof of work prior to the date if you plan to sell it at all? Yeah, I would say from my opinion, and we don't really know what's going to happen with ETH proof of work, I would probably rather not short anything. I think the goal would be to capture value from the other network rather than speculating on if the price is going to go up or down, since it's a pretty clear opportunity for the mutual to capture value. I would also say from a management responsibility point of view that shorting funds from the capital pool, regardless of any chain, is likely not something that we should be doing for an asset that's basically going to come into existence and be highly speculative. So I think, in my opinion, trying to capture value where it's available with relatively low risk, given that we can mitigate replay attacks should the chain ID remain the same, is probably the safest way to capture value for members. but Butter, if you would like to short ETH proof of work, I will leave that decision completely up to you.
Yeah, I technically don't think we can actually do it anyway, so I think it's a bit of a moot point, but
Yeah, whether or not it is going to be available, I would say that probably not doing that would be the most responsible thing. But yeah, again, I don't know if anyone's going to have a market for that but who knows? We do live in a very degen industry, so. But yeah, any questions on this topic? Otherwise, I can move to the open forum section. If there's anything that I haven't covered, any questions that anybody has, or anything that they want to bring up for discussion, feel free. So you can talk in voice, or you can share any questions or comments in the community calls text channel as well. But if there isn't anything else, I can wrap the call up for today. Thank you, everybody, for joining us on today's call. I know that there's been quite a bit happening on the governance side of things, so thank you for staying engaged. We'll have more on the ETH proof of work discussion on the forum, and when that is live, I'll make an announcement. But I hope that everyone has a great rest of their day and a wonderful rest of their week, and we will see you on the call next week.